Welcome to the Global Hydrogen Interview Series, also known as Full Court Press, where we take a rapid look at a market that some are calling the new oil of the 21st century. My name is 𝗤𝗫𝗋𝗶𝗵𝗶. I am the Director of the Energy Transition Dialogues, and I'm very glad to have 𝗤𝗵𝗹𝗶𝗵𝗶 with me today. He is the team leader of the hydrogen market at the German Energy Agency, also known as DENA. 𝗤𝗵𝗹𝗶𝗵, thank you very much for joining us.
Michelle, thanks for having me.
Thank you. Well, we're going to start on a very positive note. I'm just going to give a quick overview for the listeners about what this means for Germany and the progress, huge progress that Germany's made. So we're just past that 1-year anniversary when Germany presented its national hydrogen strategy, one of the first countries worldwide to do so, even before the EU did theirs. And when it comes to green hydrogen, specifically, renewable energy already provides the majority of Germany's electricity. So hydrogen growth is a logical next step for achieving carbon neutrality. The country already has the world's second highest number of hydrogen refueling stations. The introduction of a power to liquids quota, also known as PTL, is currently being negotiated, and the first hydrogen trains are already running on several routes. So this is a very bullish springboard for Germany's future, its next chapter in hydrogen, and of course the result of a lot of proactivity and a lot of hard work. But 𝗤𝗵𝗹𝗶𝗵, what is next? What is next when it comes to creating regulatory conditions for a market ramp up for hydrogen technologies, for a hydrogen economy? What can we expect to be coming down the line?
I think the main challenge at the moment is really getting into volumes, and we have no shortage of targets, and we actually also don't really have a shortage of funding at this stage, contrary to other countries who I would say didn't put their money where their mouth is in a way in terms of their hydrogen strategies. We have dedicated 9 billion euros to hydrogen market development, and 2 billion of that will be for international cooperation projects. And I think that should be sufficient to kickstart the market. I think the problem that we are seeing right now is maybe not so much in the mobility applications that you allude to, but rather how can we make hydrogen work for industry? How can we create volumes? And how can we create them at such low prices that those companies that are in international competition can actually use hydrogen at scale?
And what are the answers to some of those questions when it comes to the scalability of hydrogen? I mean, it's a global question. What are some of Germany's answers at the moment?
We were, I think, one of the first countries to explicitly state in the hydrogen strategy that we will need imports. That has been made very clear, and I think the only other country to rival us in this sense is Japan, who also stated that very clearly. We estimated about 85% of what we will need, even 10 years from now already, should be imports, and we are following through with that. Right now, there's a discussion on which infrastructures do we need, how do we transform our ports, transform our pipelines, and we think beyond Europe also in that regard. In establishing global hydrogen supply chains. Because
of course, if you can get imports from the EU, I imagine that would be the priority, but some of the potential you're looking at further abroad, China, Middle East as well, Saudi Arabia, that's on the cards as well, isn't it? Exactly, and that's the priorities of the governments, but also of the companies. Currently, there's even some discussion on should we establish an import strategy next to the hydrogen strategy. And I think that makes a whole lot of sense. What we see in terms of our analysis here at DENA is that there could be a bit of a dual market determined by which final fuel you want, whether that's hydrogen in a hydrogen car or it's ammonia maybe in a chemical plant. And the hydrogen itself is always easier to transport in a pipeline. That in turn means that sort of continental or regional suppliers have a cost advantage. Whereas for ammonia, for methanol, for power to liquids, transport costs are essentially close to zero, like with oil in the oil markets today. So this is a bit of a dual market, one that could be easily global and benefit from renewable potentials globally, another one that is more continental in its shape, close to the natural gas market. Saudi Arabia did do the first blue ammonia exports over the world's first over to Japan last year. So that template is already beginning to develop to a degree, isn't it?
Exactly, and we see that for green ammonia right now with the project at NEOM. It's also funded by the German government. We see a similar project for methanol happening in Chile. So I'm confident that we will see something like that emerging in the next couple of years.
And you also mentioned then about more of the continental side, and of course part of this means repurposing the gas network, and at the moment the 40,000 kilometers, which equates 24,800 miles, I believe, natural gas pipelines to be hydrogen ready across Europe by 2040, and this is nearly double the ambition that was first released last year. So in itself, that's a huge jump. Is that when you're talking about the flexibility on a continental basis, is that really what you have in mind?
Yeah, I think the preconditions are good and better than elsewhere with the very well developed European continental system, which let me add that not only includes pipelines, but also gas storage at scale. The challenge that we have is there is currently no very large hydrogen network operating. The largest one is essentially an industrial cluster in Belgium and southern Netherlands. And the challenge is there. Yes, we can repurpose pipelines to hydrogen pipelines, but we also have to invest significant amount of capital into that. The question is also who will pay for it, because it's not a market-driven environment where things sort of organize themselves. So we actually need policy action for that to happen. And that extends then to our eastern neighbors. If you think of Ukraine and Russia and the potentials that we have there, or even the Gulf region, that would actually need bilateral, multilateral action to take shape.
And it won't necessarily be cheap getting such infrastructure established. Of course, the longer term benefits make it seem cheap in retrospect, but getting started may not be as cheap as some who are emerging from the economic strain of the pandemic, what the IMF calls potentially the worst economic squeeze since the 1930s. There's still a lot of uncertainty around. Yes, oil prices have bumped up a little bit at the moment, giving some investors a bit more bandwidth, but not significantly. So do you think that there's that wider economic environment as well that will make some of these decisions take a little bit longer? You said at the beginning, money is not a problem, and 9 billion with Germany, but on a broader scale in the broader market, do you think that some of these projects might face a little bit of headwind?
I don't see capital as a scarce resource really nowadays, and also not in terms of those projects. What I do see as a problem is for hydrogen. If you compare that with how the infrastructure for fossil fuels took shape, we don't have the volumes to start with. No. So back then it was easy. You build a pipe to Russia, you supply it from the German side, the Russian side supplies the gas, and there you are. Done. But now this is a problem because we don't even have the quantities that could fill the pipeline in the first place. So who's the first mover? That's the question here.
Exactly. And how do you think, you mentioned about policy, and that will be what's so key to getting past that, and that's what I'm referring to. So we've got the policy in place, but somebody still needs to put their foot over the line first for a market that isn't tradable, isn't scaled up yet, and it will be, I mean, I think that's quite a hard sell for some. Am I right? Or
yes, I mean, that's exactly how we see it. From our discussions with project developers and technology providers, they are always concerned about risk, and I think there's knowledge that in the future it will somehow work out, but there is a lot of short-term risk. The short-term risk is one, the technology risk, because plants at this scale that we would need haven't been built yet. Second risk, I think, is really the offtake risk, and this is something where governments are historically very good at in guaranteeing the offtake. The third one, I think, are other economic risks, such as country risks and credit risks, that are also part of the repertoire of what national governments usually sort of facilitate, also in international supply chains. So I think let's look at the instruments that have worked in the past, be it for renewable deployment or international development and cooperation. Right now in Germany, we are having a mechanism that is funded by 900 million euros, and it's set to fund the first 5 projects with an offtake reverse auctions, very similar to what we know from renewable power. So you can bid on a 10-year contract that will guarantee the offtake by the German government for an international hydrogen project. I think that's excellent, but we would need more from other governments too.
And what about subsidies? How do they play into this from your perspective?
They should. I mean, they need to be there at the moment. Right now, we have a couple of offtake markets where you could see incentives that are strong enough to support offtake. We talked about the power to liquid aviation quota for electricity-based fuels. We see the transport market in general, because it has very high avoidance prices already for CO2. But those markets are volatile, so governments can sort of step in, subsidize a bit, and also sort of guarantee the offtake. And I think subsidies are necessary for any nascent market. And the question is, how do we distribute them? And I think sort of these reverse auction schemes and offtake schemes are the way to go.
And for many, it's how do we distribute them now, of course, and the other key question is, how do we ease off them in the future? We don't necessarily want to end up in a similar situation that we have now in certain countries. I mean, of course, the Middle East is a prime case where there's very costly subsidies which don't necessarily promote the right thing.
Yeah, I do agree, Michelle, and I think we also know the remedies from a sort of policy-making perspective. The whole idea of contracts for difference, that the government just acts as an off-taker but also supplies to a market, works very well with this topic, because the price for the green property, for green hydrogen, or be it blue hydrogen, for carbon abatement in general, is likely to go up as we go towards climate neutrality. So it's a very good business case for the government, in fact, to phase, or one easy way to phase out subsidies, if you make sure that you can participate from rising offtake prices for the green product.
And if we're going on the environmental argument alone, there isn't very much choice. It's just the economic argument that that needs a bit of finessing. I mean, you've spoken in the past about long-term price projections for hydrogen at around €2 a kilo and below, even at locations with excellent wind and solar conditions, areas like the Middle East. And while cost parity with fossil fuels can remain challenging, even then, price parity for the buyer is within reach when combined with an ambitious carbon price. Now, carbon pricing has obviously evolved quite a bit from 1990, when we had 2 carbon pricing initiatives, versus the 64 the World Bank says we now have. So there certainly has been progress, but there needs to be a lot more and a lot more verification, accountability, standardization, and so on, for it to be really integrated into supporting a hydrogen market. How do you see this playing out in the next decade?
I think what we need as a precondition is, to any global market, is sort of a common agreement of what means green or what means low carbon. And that's where we struggle right now, even within the European Union, let alone globally. Once we've established that, and that really isn't that easy, carbon prices really do play a role. Emissions tracking is also important, because sort of life cycle greenhouse gas emissions are just a bit more complex than just looking at the, just allocating zero emissions to green products, for example. So carbon prices, as they rise, some IEA scenarios say €150 per ton. I would say we can go ambitious and go even higher to maybe 200, €300 per ton.
Within the next decade?
No, within the next decade, I would be happy to see 3 digits, but then carbon prices can be surprising, as we know from the EU ETS, who has then tripled in a rather short term. So I think when
would you expect it to go up to 300 potentially?
That would be my 2050 bet. But if we reach, let's say, 100 on sort of broader carbon tax measures or carbon price measures, such as the EU ETS, in the next 5 or 10 years, I would be tremendously happy.
I used to price the emissions on the EU ETS, daily emissions, and the idea that this 25-cent market or 3.50 market would one day be going up to 300 is quite astonishing. Sure, it's reflective of how much everything's changing.
Exactly, but it's also reflecting of how we run out of the easy solutions. In decarbonizing the power sector and making industry more efficient, it's one way, but I think we are really also with hydrogen have the possibility to address the tough stuff in the energy system.
Exactly. And on that tough stuff, what hopes do you have that a lot of progress will be made on those by 2025, 2027, the near term, really?
My biggest hope, as I said earlier, is really for the industrial sector when it comes to hydrogen. Because
when by? Do you see the big progress being made in that space in the near term?
In the next 10 years, yes, I do, because there's no way around it. We've, in many countries, almost exhausted the options for decarbonizing the power sector. Yes. If climate targets are anywhere serious, that's the next big thing. buildings are just a lot harder. In industrial emissions, sort of are a comparably easy win. We also have the carbon border adjustment mechanism announcement from the European Union,
Yes.
and that is sort of being worked out this year. If that really comes to play, I think we move a lot closer towards reality.
A game changer.
Yes, definitely.
I mean, the German Hydrogen Council will be my last question, because I know we've got to wrap up shortly, but the German Hydrogen Council called for an urgent decision on blue hydrogen, and this is very recently, as a bridging technology. What are your thoughts? Would a transitional role to low carbon hydrogen, as opposed to just green hydrogen, or a dedicated focus to green hydrogen, do you think that would jeopardize the timetable for Europe and Germany's climate objectives, which of course is already relatively tight? Or do you think there needs to be this level of flexibility to help those, as we've mentioned already, there aren't natural market drivers right now, so to help those who need a bit of encouragement and a bit of reassurance to transition? What are your thoughts? Is it a threat or not?
I think on the blue hydrogen question, the question has indeed to be it needs to be decided now, because if you start implementing those plans too late in the decarbonization process, then they will become economically unviable. Problem is that even with blue hydrogen, you have about, yes, maybe 80% less emissions than gray hydrogen, but you also have 5 times the emissions of green hydrogen.
Exactly.
So it really depends on sort of your reference point, whether that's full defossilization or whether that's the current energy system. And in turn, that means if carbon prices rise and policy efforts rise, it becomes unviable. And as we know, in the energy business, you need your 20 or 30 years to run a plant economically. And that's why you either build them now, provide hydrogen at scale to decarbonize industry, for the first 80%, or you do not at all. And I think that's a bit why everyone's waiting for that tough decision to make. There are risks associated with CCS, especially gaseous CCS. You have methane leakage upstream, you have capture losses during the capture phase, and then you have CO2 losses in the end. So those 3 risks cannot sort of be argued away or engineered away. And I think that's why it's really not an easy choice for policymakers around the world.
Indeed, and it certainly isn't a holy grail, but it's also a market that has long been said that there's huge amounts of potential, and it hasn't quite gotten going yet. And in the last 3 to 7 years, there's been this big push. Oh no, we must develop this market. It's going to be key to the energy transition. It's going to be key to a low carbon future. And then as more time goes on, like you say, we're reaching this crunch point, this crossroads, and actually potentially its relevance has potentially worn out. Kilian, thank you very much for joining us. It's a huge subject. Germany is doing so much work on it as well that we've really only touched the tip of the iceberg, but hopefully you can join us again and we can go into it in a little bit more detail.
Thank you, Michelle. Thanks for
very
having me. It was a pleasure.